Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be showing you some incredibly powerful as well as very interesting information which I've been looking at in the charts. And as per the title of the video, I'm going to be showing you a powerful Bitcoin pattern on one of the indicators which no one seems to be watching. And since the end of the bear market, it seems to be giving us a powerful clue as to which way the market is going to go. So it's something we must pay attention to. And on the big picture view, I'm going to be looking at exactly after the halving when we can expect the price of Bitcoin to break above the all-time high of 69,000, just based purely on the evidence of the charts. And obviously we'll have a look at the 60-day cycle to see exactly where we are and where we're heading over the next few days and weeks. So if that sounds interesting, then without further ado, get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes and nothing in my videos should be taken as financial advice. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so we're going to start off with this particular indicator here, the MFI. As you probably know, I use this MFI because it looks at the RSI plus the volume together in a combination. And this becomes a very powerful indicator because it gives us a little bit of a clue as to what may be about to follow. So here it is, going back to November at the end of last year. And what happened here was, we can see that after the FTX fall over here, we went to a new low up to that point. But as you can see from here, when we had a bounce, we came back and double bottomed where we created a new low at this point here. So what happened here was that we got a fall in the price over here. So what we got with this price here was we got a lower low on the price side and a higher low on the MFI side. So you can see what followed after here. Once we made a lower low here and a higher low down here on the MFI, the price started rising all the way up to the 18,300. So we went from 15,400 all the way up to the 18,300. And this little indicator was giving us a clue of what was about to follow. If we move on a little bit further, we get another clue over here. So once again, on the MFI, we made a low here. And at this point in the price, we made a low price here. However, as you can see, the MFI started rising very sharply, but the price actually went slightly lower one more time. So there was another divergence, making a lower low on the price and a higher low on the MFI indicator. And look what happened afterwards. We got a bit of a parabolic move to the upside, all the way from this low here at around about 16,300 all the way up to the 24,500 here. So once again, the divergence on the MFI was giving us a clue as to what was about to happen over here. So it was a bit of a leading indicator here. Moving on to the next signal that we got from this MFI indicator. So we can see quite clearly at this point, when we made a low down here, this was the candle where that low point on the MFI was. So we went from this candle here to a low down here. So we made another lower low on the price, but look what happened on the MFI. We made another divergence by making another higher low to this point here. And this divergence caused this increase in the price one more time. So once again, the MFI was giving us a leading indication of what was to follow on here. Moving further forward, once again, at this point with the MFI came at this candle over here. And from that point, we made yet another lower low on the price, a higher low over here. So we went this way on the MFI and down this way on the price. And look what was to follow afterwards. One more time. So the price went from about 19.5 all the way up to around 29,100. Moving further, we got a flat price over here to this point, but the MFI was starting to rise over here. So once again, there was a divergence on the MFI. So this caused the increase to the 31,000 from down here at 27.7. The next time occurred over here. And once again, we got a lower low on the price and a higher low on the MFI. And then we got this big move here from the 25,700 down here all the way up to 28.5. So this was a $3,000 move. Moving to the next signal, and what we find exactly the same thing one more time. We made a low here at the MFI, and from this candle we got another lower low on the price and a higher low on the MFI. And look at the price increase here. We went all the way down from around about the 24.7 all the way up to the 31.5. So we had a $7,000 increase just based on the leading indicator here on the MFI. And the reason why I'm showing you this indicator is because just now what we're really seeing is this current price action and the MFI, what the signs it's showing exactly now. So as you're aware, for the last 2 weeks we've been in this sideways action, showing very little room for actual movement to the upside or the downside. But what the MFI is showing you is something incredibly accurate, and that is that from this point on the MFI, this was the candle there. What we've done is make a lower low, quite a steep lower low on this, on the share price, whereas the MFI is actually clearly showing us a higher low on the MFI indicator here. And those with a keen eye will be watching this orange trend line here, since I've been showing you this from the end of the bear market. After we'd bottomed out at the 15,400, we got a trend line starting from this point here. Then we had another support over here, and then another one in June, and now we're right on the trend line one more time. So what we have is a powerful trend line which has been holding up the support for the Bitcoin rise in the price since the end of the bear market, as well as we're getting a divergence on the MFI. Everybody has to make up their own mind, but these two indicators seems to suggest that we are at the beginning of a big move to the upside here. And of course there are other bearish indicators as well, which would suggest we're coming down, but I think those are weaker on balance than the two that I'm actually showing you here. So I hope you found some value in this technical analysis, just showing these two combination of the indicators and why they're quite powerful in showing where the next move might come. I just want to have a quick look at the dollar and tell us exactly what's happening there, because that also may be giving us a clue as to what may happen to the Bitcoin price in the short term. So we topped out here at 115. We've been making a series of lower highs along the way here, and once again we've come here to another lower high. So the trajectory is very strongly to the downside here, making lower lows on this side and the lower highs on this side here. And if we have a close look over here, this is giving us a clue as to what may happen in the short term. So what we have is an evening star pattern with these 3 candle development over here. So what we have is a green solid candle on this side, followed by a small bodied candle at the top here, then followed by a big red candle on the other side. And with a high degree of probability, what that follows usually is a big move to the downside here. So we should really see that, although we've got a support line here as well, so that may save it. But on the whole, I would expect a trajectory of a downward slide for the dollar here. And on the weekly chart for the dollar, the actual candle here, which is an inverse hammer candle, would seem to suggest that this is coming down further. An inverse hammer at the top of a trend over here would always suggest a move to the downside with a higher degree of probability. Okay, so moving on to the big picture view, because a lot of people in the YouTube community is talking about hitting the 69,000 this year or very close to after the halving. And I just want to give you a realistic picture of exactly where I think, based on the evidence of the chart, when we can actually expect to break the 69,000 all-time high that we had in November 2021. So going back to the first cycle, so first one was this one here from around about the June 2011, and the halving occurred here in November 2012. And what I want to look at is approximately after the halving, when did we actually break the previous high over here? So the number of weeks for the price action over here to break its previous all-time high from the halving here was 13 weeks. So please take a note of that, 13 weeks after the first halving to the point where the price broke its previous all-time high. Similarly, for the second halving, the all-time high at that point was over here, and when we broke up at this point, the number of weeks after the halving here was exactly 33 bars. So 13 weeks in the first halving, 33 bars, 33 weeks in the second halving. Then the last halving that we got in May 2020, and the all-time high at that point was the 20,000 that we reached in December 2017. And when we broke it over here, at this point, in December 2020, the number of weeks it took to break that all-time high was 31 bars. So far in 3 halvings, it's taken 13 weeks, 33 weeks, and 31 weeks to break the previous all-time high. And that would average out to be around about 25 weeks. So just based on the evidence of the chart, what we can expect in the current halving that we're expecting here, around April 2024, if we average 25 weeks from there, what we can expect is that around about October time, October 2024, is the time when we should break the $69,000 mark here. And that would fit in nicely for the parabolic move afterwards. So those with a keen eye will have been noticing this red curve over here. And we can see that from one top to the next top, it provides a very strong support all the way up to that point. So this is what happened here in the first cycle, the first halving. The second halving was exactly the same over here. The price on the whole followed this red trajectory all the way up to the point where it broke up. The third halving over here, exactly the same. We're following this red curve trajectory. And so far, for the current halving to come in April 2024, I've drawn this trajectory here. So what we should do is that while we're waiting for the first peak to occur in this range here between 45 and 50,000, what we'll find is that we're going to have a big move to the downside into the halving around here. But it looks to me as though this red curve is going to save it from much further falls down here, if the charts from the previous historical context are to be followed. So here we are. By the time we get to the halving, we shouldn't really fall below this price here, around 32, 33,000. And of course you can move this line, but on the whole, around about this price is where we should find support, all the way to the point where we break the all-time high of 69,000. Anywhere in this region, October, maybe November, maybe even December here. And of course, the most important indicator on the larger picture view is always going to be the pi cycle. So please always keep this in mind. Never lose focus from this, because this is the most important and the most accurate indicator to predict the top of the market. So people looking to know exactly where the top of the market is going to be need to look no further than the pi cycle. So starting off, that within the first 4-year cycle, we got 3 peaks here where the pi cycle crossed exactly at the point of the peaks. Here, over here, and at the top of the 4-year cycle peak over here. So this was a clue that the pi cycle was going to prove to be a very important and relevant indicator for projecting the price to the top of the cycles. So at the next cycle top, as we saw here in December 2017, once again, once the pi cycle lines crossed over, that's when we had the peak. And currently at the 69,000 previous high that we had was exactly the same. The pi cycle crossed exactly at the cross over here at 69,000. And as we can see, the red line has started to move up along with the green line, just like it did over here. So we're now moving into the next phase towards the top of the cycle over here. So just keep an eye on the pi cycle top. Quickly moving on to the 60-day cycle, we can see that the midpoint of this current cycle that we're in, we made a high before the halfway point, which gives us a left translated cycle here. We were expecting a move back to the upside on this side of the midway point, but unfortunately that hasn't come. So with a higher degree of probability, this is what you would have expected, having come out of a failed cycle over here. So once again, the Bitcoin has done the unexpected and created a left translated cycle down here. So unless we have a massive move to the upside before the 60-day cycle, so only time will tell, but certainly it's just going sideways and down at the moment, as we can see from this trajectory. But as we've had a look at the MFI and the trend line that we've got, the bias in the chart seems to be for a move to the upside. And that would mean that this candle here, which I mentioned in the last week's video, could well be the bottom of this current cycle, and that was on day 47, as we see here. And we've had a day 45 cycle low as well as a 52-day cycle and a 51-day cycle. So this is within the realms of possibility and a good degree of probability as well. So this can happen, but I want to show you something which is showing that we're going to have an imminent move, and that could well be on the downside and the upside. We must always, as neutral observers of the Bitcoin price, we must be able to always look at the opposite view to what we may be thinking it may happen. So the downside is obviously there, because when you look at the Bollinger Bands, so we can see that the Bollinger Bands have tightened up and squeezed up immensely here. So as we saw, when the Bollinger Bands came to a squeeze over here, we got a big move quickly to the upside, but that was rejected. And we're getting to that same point one more time over here. And historically, whenever you get a squeeze of the Bollinger Bands, you get a move either to the upside or to the downside here. So we don't know what's going to happen, but certainly every time they squeeze up, there is some sort of a big move coming up, either to the upside or to the downside here. And on the weekly side, this is one of the tightest Bollinger Bands I've seen for a very, very long time. So we can see quite clearly that the Bollinger Bands are squeezing together even on the weekly side here. And the last time that occurred, we have to really go back quite a way to this point here in 2016, where they were squeezing together, and then we got a big move to the upside on this side. So it's looking like there's a big imminent move coming very shortly based on the Bollinger Bands and the other parts of the technical analysis that I've shown you just now. So if the move does come to the downside, we are vulnerable still to the move to this point here around about the 27,300 here. So we've already come to the 28.4, 28.5 level, and we bounced off that at this point. So this could possibly be the end of the cycle, but the next move, if it is to the downside, to this side here, to be coming back down to the 27,300 level here before we start moving to the upside. So this is what's to look forward to. And so we're nearly getting to the start of the next cycle. And this move is very important because the next round of the swing trades will be coming around for the Bitcoin miners, because that's when you want to actually catch the Bitcoin miners. Once the Bitcoin 60-day cycle comes to an end and we start a new cycle, that's when the Bitcoin miners get a very big move to the upside. And what would be powerful here would be just to go sideways into the 60-day cycle and then have a big move to the upside, or a move up to the 30,400 here, then get rejected, shake more people out into the 60-day cycle before the big move comes. So this would be quite powerful here if we don't fall down to the 27,300 level. A quick word about the Bitcoin miners, because in this Wednesday's video I will be showing a potential 250% opportunity with the Bitcoin miners. In the last few months I've been showing you these particular indicators which are telling us that after this bounce in the price down here with this RSI entries, we're going to be making a peak based on the evidence of the chart anywhere around here between 45 and 50,000. This is where the pi cycle and the smoothed out RSI, this yellow line, they're all converging around this price here. So when the price for Bitcoin comes to this point here, what we will have with the Bitcoin miners, and nobody seems to have picked this opportunity up, once the Bitcoin price gets rejected over here, this will be followed by a rejection similarly to the Bitcoin with the Bitcoin miners, and that will present an opportunity anywhere between 200, 250, maybe even up to 300%. While Bitcoin comes back down here, I'm going to be showing you with the evidence in the chart for the Bitcoin miners why there is a 200 to 250% opportunity that will arise at this point once we've topped out here with the Bitcoin. And always remember this caption here, which says quite clearly, nothing is more expensive than a missed opportunity. So what we have in this coming Wednesday's video is going to be an amazing opportunity just based on the charts. Of course, I can't guarantee 100%. Nobody can. We don't deal with certainties and guarantees. We deal with probabilities and possibilities. And that is what I'm going to bring to your attention, a great possibility with a high degree of probability that we can make anywhere around the 200 to 250% increase with the Bitcoin miners. And if you want to join the private members club on the Wednesdays videos that we do, then all you have to do is below any of my videos, you'll see the join button here, as well as in the description box, there's a link here to the membership. And all you have to do is once you've clicked on there, you'll see this box here, and then just follow that, and that will give you access to all the videos that we've done over the last 4 or 5 months and all the swing trades that we've done there. And this Wednesday I'm going to be looking at some swing trade possibilities once the market has bottomed out on the 60-day cycle. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like the video and subscribe if you haven't already done so. If you've got any comments, questions or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.